We just have a few minutes left until the closing bell. With us is Jack Ablin, the Chief Investment Officer of Harris Private Bank, where he helps oversee $55 billion. Jack, you've said attention is going to shift soon from earnings to economic data. We're seeing a lot of dull, or I don't want to say dull in the sense of boring, but dull in the sense of bad economic data today. Friday, we get payrolls out, and that will maybe change a lot of people's opinions as to whether stocks are headed higher or lower. What do you think we're going to see?
Well, I'm hoping for a great payroll number. I unfortunately anticipated one in May and in June. Didn't happen. In fact, I think I was calling for 300,000 jobs in May. We got 30,000. I was calling for 400,000 jobs in June. We got 40,000. So they've come in about 10% of what I would have expected. And I'm not an economist, but what I look at is things like temp hiring, things like jobs hard to get surveys. These have been very, very tight relationships historically, and yet they've fallen apart as management, for whatever reason, have chosen to keep their temporary workers on the books and not bring in full-time people.
Hey, let's go to the CME right now. Bob Iaccino is there, Chief Market Strategist at LotusBrokerage.com, where he trades currencies, metals, and some individual stocks. And Bob, let me get your take on the jobs number Friday. I mean, we have seen some pretty low volume. We expect people to wait until this number to do any big trading. But what is the sense about the number that we're going to get?
Well, I think this Friday's jobs number is the one, quite frankly. Now, remember that I always speak from a trader's perspective, so the one could be the next month, month and a half, 2 months at the most. But I think this is the one that my colleague has been looking for. I don't think it's going to come in at 300,000 or 400,000, but I do think the expectation of a negative number is not going to come true. And the buyers of the dips that I hear waiting for this dip, that are going to be buying aggressively in the Dow to 1036, aggressively in the S&P all the way down to 1108, they're going to get their wish, and I think we're going to rally pretty hard on Friday.
And Jack, let me get your take on revenue, because Gary Schilling, obviously, he's a noted bear, in here this morning saying it's not a surprise that we're beating on EPS here. Obviously, analysts were too high in 2008, and then they chased it down. They were too low now. But he said the second half is going to be tough, and revenue is going to be where it's really going to be hard to beat.
Absolutely. You can't emphasize that enough, Matt. The fact is, this is a top-line situation. We've got, you've got spending, profits, and hiring. And right now, we've got spending, we've got profits, we don't have hiring. And it appears, at least over the last couple of weeks, that the lack of hiring is now starting to impact spending. Over the last 4 quarters, we've had roughly a 4% top-line growth across the board, and that's respectable in in this kind of economy. But unfortunately, the comparisons are going to get more and more difficult, and that's really going to be the challenge.
What do you think, Bob, about revenues? I mean, you can obviously fire as much staff as you want and bring down EPS. Some would even suggest you could massage the numbers to change the bottom line. But revenues, how key are they? How much are traders focused on revenues here?
Well, quite a bit. I think Jack is right. I mean, the dog is sort of chasing its tail in a way. The corporate economy has been as shell-shocked as the consumer has. Yes, consumer savings rate rise. We want to see them spend some of that saving rate. Not a lot. I think the savings rate going up is quite a positive turn. But corporations are also flush with cash because they've gotten leaner, just like the consumer has. And as they start putting some of that into capital spending, you'll see some hiring, and then that circle begins. And that's sort of where we see the end of the year being positive in my shop. We think somewhere from 9 to 11%. That, once again, is a trader's view. It's a shorter-term perspective. But that spending will pick up on the heels of capital spending, and I don't think we've seen enough of that yet. The jobs number may be one of those triggers. Corporations are just as gun-shy as the consumer is.
Hey, Bob, it's Dominic here. A lot of us in the newsroom were talking about this idea that Treasury yields, especially on the 2-year side of things, keep on going down. They set another record today, yet stocks kind of just hang up and they want to go higher. What's happening there? Are interest rates telling us something that stock markets aren't right now?
I think interest rates are a holding pen right now. I really do. The yield at the levels that they're at right now don't bother me. It's just one of those things where it's just the safest place to be. It's an institutional investor savings account, so to speak. No one is looking at even holding the 2-year, in my opinion, to maturity at just over 0.5%. I just think it's a holding pen right now for more capital that I believe is going to be flush into the market in toward the end of the year. Not speaking toward 2011. I just think in toward the end of the year, there's too much good news out there, and the mood is starting to change.
And Jack, let me ask you a question. It looks like travel bookings at Priceline are up about 43%. 43%. How does that make you feel about consumer and consumer spending in general?
That's great news, Matt. I mean, that is the ultimate discretionary purchase, and one of the things that actually got us pretty enthusiastic about the recovery late last year, or middle of last year, I should say, and to see that kind of ramping up, certainly bears further watching. Absolutely.
We heard yesterday Ben Bernanke say that rising incomes would produce rising consumer spending. It sure didn't pan out in the numbers today. Do you have faith, Jack, that Ben's outlook is better than most?
Well, I guess he's keeping his fingers crossed with the rest of us. I mean, it's really a difficult quandary. We're hoping for this, this virtuous cycle of spending profits and jobs. And I think, notwithstanding you people in the media making such a big deal of some of these economic numbers around the edges, the fact is it's all going to be Trump this Friday with this jobs report. If it comes in big, all of this stuff falls by the wayside.
All right on the money there. Jack Ablin, pleasure to have you, CIO of Harris Private Bank. Bob Iaccino of LotusBrokerage.com.